Hello and welcome to this Forex Preview at xm.com. I'm Maria Pachordadis, and joining me is investment analyst Marios Hadjikyriacos. We'll be discussing upcoming Australian inflation data and the potential reaction in the Aussie. So Marios, back in November, the Reserve Bank of Australia cut rates and expanded its quantitative easing program. Is the RBA likely to take further action if we get another muted inflation print on Wednesday?
Hello, Maria. No, I think that any further policy action from the RBA is off the table, at least for the foreseeable future. So the data are expected to be on the weak side. The CPI rate is expected at 0.7%. However, I would argue that's not as bad as it sounds, because if you look at what the RBA was expecting in its latest forecasts, it was even lower. The Reserve Bank expected a print of 0.5%. So you could even call some print like this one an upside surprise relative to what the RBA was expecting. And overall, the broader economy is doing quite well. So I don't think this will have much of an effect on the RBA's policy, and I don't expect any huge market reaction either. The RBA is on hold for the foreseeable future. It already cut rates at its November meeting, and it doesn't have much firepower left anyway.
Okay, and what about the Aussie? If the RBA remains on the sidelines, what forces are likely to impact the currency?
Well, since the Reserve Bank is out of the picture for now at least, I think that the Aussie is at the hands of global forces mostly. So specifically, the Aussie is a commodity currency, and Australia is a huge commodity exporter, so the Aussie is very sensitive to what's happening around the globe. Now, specifically, what the Aussie's performance going forward, I think, will depend on how global risk sentiment evolves, so stock markets, how they perform from here, how quickly and how smoothly the global vaccine rollout goes, and on the final size of the US stimulus package that is being brewed in Congress right now. Now, overall, I would argue that the outlook for the Aussie is still positive. The RBA wants a weaker currency, but it doesn't have a lot of ammunition left to make that happen. And at the same time, the global environment is improving. We are looking at a situation where the global economy is likely to start healing its wounds as the vaccines are rolled out, and that will likely keep elevated the demand for Australia's commodity exports and therefore perhaps for the Aussie itself. Now, having said that, I do see a couple of major downside risks. So the first one is whether the existing vaccines that we have will be effective against all of the new mutations of the coronavirus that are being discovered. If even a single of these variants proves to be resistant to the vaccines, then this whole narrative that the global economy is going to start improving and that everything will reopen fairly soon could be shattered, and that would be a huge downside risk for the Aussie. The other risk I see is the diplomatic situation with China. Australia and China have entered a diplomatic brawl of sorts lately, with China imposing some tariffs or even banning some Australian products. And even though the markets haven't responded to this so far, I think it's a key spot to watch. China is Australia's biggest customer, so in terms of its exports, so if we see the situation deteriorate any further, it could be a reality check moment for the currency.
Marios, thanks so much. And thanks for joining us at xm.com.